Good morning, all, here on Fed Day. Have you ever seen a more hyped up Fed Day? Particularly when we're in Advent season, seems a bit overdone, doesn't it? So we have rates a tad higher. The S&P and the Nasdaq futures are higher. Fair value by about, depending when you look right now, but roughly about 8 to 9 points for both of them. So the Fed's numbers is due today, or the Fed's meeting is due today. The Bank of England tomorrow, and the ECB's ahead too. So overnight we see a lower oil price. We had API yesterday, and we have the EIA number today. So the API had as expected though, a big build on Cushing, which is what the WTI contract's based on. But we do have it lower as more and more concern of lockdowns and the variant abound. Bitcoin is steady. If you saw, we had an interview of Meta Johnny, which was really interesting over that. Gold is unchanged. A lot of people have commented on that, having no reaction to all this inflation. Silver is down. Natural gas is up a tad. Remember, that's just been disappointing to a lot of people on the speculative side, but it's doing what it does this time of the year, awaiting a weather situation. Germany and France are both up. England, Spain, and Italy are down, and Italy's also up. As far as stock markets go, as far as currencies go, we have the Australian dollar is the strongest, and the Canadian dollar is the weakest. But no really significant big moves anywhere as you would expect. The big moves have been happening. As far as news goes, stock specific, Eli Lilly is up the most. They're up $10, which is 4%, after issuing upside guidance for the next year. Lowe's is down 10%, Lowe's the hardware store, after reaffirming below consensus revenue guidance and issuing an underwhelming guidance for the following year. Remember, Lowe has been hitting 52-week highs. A lot of excitement for the building industry, home building, etc. But obviously commodity prices can deter there. Nucor also issued downside guidance. Nucor's NUE. Brooking is one that's up $40, but it is a $2,100 stock. So what's that about? Nearly 2% after they were upgraded by JP Morgan. And you can see a lot of these stocks, Apple's the best example. They just run up on upgrades and downgrades. The cynical part of us says that's how to get out of a stock, right? But of course there's Chinese walls. That wouldn't happen. CMC Materials, symbol CCMC, is up 23%, up $34, after it was agreed to be bought by Entegri, ENTG. So that's a big takeover right there. Overnight, we had retail sales out of China, which were worse than expected. They were 3.9% on the year versus 4.6%. We had a trade service pretty much as expected out of South Korea at 3.06 billion. We had on the same area there, we had India with a trade deficit, a little bit lower than expected, but a big number, 22.91 billion. And it's been up there for a while. Down in Australia, they had the Westpac consumer sentiment. That was a lot weaker than expected. I'm not sure they're expecting there. The country's been, we've had, if you've been following it, political issues down in Victoria versus other states over the whole virus and lockdowns. And I guess the cricket sentiment hadn't filtered in at that point. New Zealand had a current account deficit of 4.6% of their GDP, a little bit higher than expected. Other news was Kuruda out of Japan. He's acknowledged, it's kind of weird there. I saw a statement that about inflation trying to get to 2% there, but Now we have one that is acknowledging higher corporate costs. So not sure what the difference is there. Nothing else too significant. In economic data already this morning, we saw the CPI at 0.7% out in the UK. That's higher again. We're getting higher inflation everywhere. They're expecting 0.4. Germany, it was a little bit lower in their WPI. France was as expected. These are all the inflation numbers. Italy, a little bit less than expected. Still a high number though, 0.6 versus 0.7. And Spain was a little bit less. So there we have it. We have the English one. I just want to touch on that again. That is relevant because they have their number tomorrow, their bank meeting, the Bank of England tomorrow. So let's have a quick look at charts here. Not a lot to talk about out from what we updated last night, but so of course this can really change once that meeting drops, and particularly after Powell's press conference this afternoon. So that's going to be 2:30 Eastern time, the press conference, 2 o'clock the actually announcement, and that's 1:30 Central time and 1 o'clock Central time. Overall, let's look at daily. So daily S&P. So recall overnight, yesterday's session, we held all these numbers, right? Let me bring out. So we held here, that was the low right on the Tenkan. A little bit under, which is even better. You actually prefer the stops to be tested and then come back above. A little spit, we call that. Now we have a green bar here today so far in this session. But this could be quite a violent session because it's very thin. But often when there's so much expectation, it becomes a dud. I think we've all been down that road in life. So looking at this, we have this double top up here from the bearish point. Top of like A, B, that would be a B for it to go down. The bullish is completed C, and this is a 1, 2 to go higher. Pretty straightforward stuff. Look where our Murray is. It's way up here. So you do have room for that bullish count. On the 6 hour, did I say 6 hour? I meant to say 60 minutes. It is early. I tend to have a traditional sleep in. I shoot out on Fed days. Okay, here is, remember what we're watching, and know get to know your Murray maths by now. But classic 8-8 spit. We came down nicely to yesterday. Remember, look at that line across my page. You can see we were testing that high. A lot of this is just replication. We've failed all night since yesterday afternoon to get above this level, right? So that's 46.47 on cash, just under 44 on futures. Remember, we're looking at March futures. December goes off the board on Thursday night, Friday morning. So we're chunking around Tenkan. We're sitting just looking at this line. See, when you see so much work go on a line, you know that's accurate. For Elliott, pretty simple. 1, 2, 3 as we went through on the daily. You can see it here. 5 minutes. Do we need to look at this? You can see the chop, right? Bang, bang, bang. I traditionally and are pretty slow heading into Fed days. What tends to happen, it tends to run one way or the other. In other words, who's long and who's short. Pretty clearly, we've seen a lot of longs jump out. We saw a lot of shorts jump out before it. So we're fairly balanced. We are all well aware there's massive optionality out there, meaning a lot of puts and calls. A lot of that, as we opined yesterday, is because of the time of the year, locking in profits, etc., cynically bonuses, but in reality, just protecting the portfolio. And that's reflected in that. So when you have such a skew too, it's hard to get a really aggressive move until it feeds on itself, right? So that's what we got there. Now, Apple, which has been the talk of everything, is trading just under 175. So we had almost identical, right, to the S&P. Look at that. Same, not a lot happening sideways. We broke that little channel. This is the 60-minute chart, but look how it's clinical. It rode the cloud there, came down here. We have a just over 3/8 move there. So very, very clinical. If you trade options, you'll notice what's going on the grid on that. As far as the 4-hour, this is the problem it's running into. We're having the Cajun try to go for tanker. So that's telling you the danger, we're running out of steam. So it really needs something. To build something more severe than an A, B, C, that does, to me, that's all red. That's a hard call for much of a correction there. So it does need a little bit of work before it can do something. Very simply, there's your 50 moving average, right? All pretty clinical. It's obviously in balance. That's what that's telling us. So I like to say, keep on corrections. Look for simple things like an ABC. Okay, 3 moves retracement. As far as oil goes overnight, we're still tracing out that correction, and it's behaving pretty nicely. You can see finally on the daily, you've had the big 1, 2, 3. So it's same pattern everywhere, really, right? So you can see they're moving together. So that's either a corrective 4, a C complete of that 4, or that's A, B, and these are kind of unfulfilled B. We've come down, we're holding this slight uptrend and that daily tanking. We've now come from under that cloud to have that exposed above. So keep an eye on your tanking. As far as the trading grid here, so if we can see that, I might blow that up, make it easy for you all. Or y'all, as we say down here. So we are smack between S1 down here at 68.80 and PP up here at 740, which is the pivot point. As far as Murray goes, we're trying to bounce to this double bottom here because it's minus 2/8. We did have a spit here in the early morning this morning. Now, bear in mind that these sort of moves can do anything if Fed runs awry. I mean, the market runs awry after Fed. So keep in mind your different levels. And also the VWAP, just like it does in a lot of stocks, keep an eye on that as well. So there's your basic grid. Natural gas has trailed up through the night. Again, these moves are pretty much relying on the different weather models that come out at different times of the morning. The last one was out about 2 hours ago. So keep that in mind. If you are a speculator, be aware of gaps and gaps down. It can be a brutal one to trade. And lastly, on oil, here's the 60 minutes, which I wanted to show even more precise. You got this whole sideways movement ever since these highs. So it's congesting. There's a lot of big opinions out on oil. A lot of people are either really short it and a lot of people building into long. So keep all that in mind, what's going out on positioning. Watch things like how it reacts at tops and bottoms. Look at your seasonal grids, in other words, your options out the curve, things like that, to give you an idea of the positioning. Okay, and that pretty well sums everything up. As far as Bitcoin, I know a lot of people watch that or trade it. A lot of people watch it as a good indicator of speculation. You can see on a daily, it's still in this big downward sloping, trying to correct that destruction it had a few nights ago. On 240, look at that flagpole, but you can see they're all kind of doing the same thing. And that's a lot to do with the time of the year. You know, it is Christmas. So that's pretty well our wrap on the markets. Just remember what they're expecting on the Fed today. They're expecting a a quickening of the taper to as much as 30 billion per month. So that pace would put it at 105 billion. That'd be no bond buying near March. In other words, remember they're tapering off bond markets. So everything being equal, that's what they're shooting for now. Powell at his last meeting said they would revisit the tapering in December. A lot of outright bulls thought, well, that meant, they're just going to hold it. They're not going to do it anymore. But and as far as the dot plan, don't we all hate that word? The dot plot and the dot plan. It's in different places. They're going to show 2 tightenings in 22, and that's up towards 0.75% for the Fed funds target versus what was unchanged in the September plot. So that's going to be projected at 0.3 from 0.25 is the feeling. So these, put it in perspective, these are very low. So it's hard to compare these against other interest rate rises when you look back on it. It is different times with a QE. So it's the psychological effect and how quickly banks will pass that on. So it's all to do with liquidity, right? So let's think that. Watch how the market reacts on all this. We are seeing markets push up here. Remember, we have retail sales, and I'm just waiting for those to drop today as well. So today had it's all to talk about the Fed, but we have retail sales, and of course the big one we're watching over here in the little oil world is the EIA numbers. And so just a quick question here about the API. A lot of people don't pay any attention at all to API unless we're right at a bull or bear sequence, right? In other words, at the top of a market. So keep that in mind. We do the Cushing number used to be very similar. Not even that is similar anymore. So those are also on the website. Go to Around the Barrel, and tomorrow is natural gas, which is in to the vortex. We label that, so they're pretty popular. They're on the website there. That is about it, everyone. So right now we have the Dow a tad down, SPX a tad down, but we had a little push there after those numbers dropped. Manufacturing came out a little bit higher. The Empire Manufacturing at 31.9. They're expecting 25. That's New York manufacturing area. But the retail sales number was actually quite subdued, 0.3% versus 0.8% expected. And the relevance is the whole US economy is basically based on consumerism, right? To quote, I think Bernanke really focused on that. That can be put off with the virus, people not spending. It can be put off with people not having money. And that's all sort of things that Powell and his cohorts will be going through. Have a great day. Be tight and careful around the Fed number. Don't let yourself overreact. But don't be shy either. That's where there can be opportunities. Okay. Enjoy. Have a great day.